Good morning everyone, I am Kanish Bhaya and I'm back with another video, and today I'll be talking about diversification. So what is diversification? It's basically that instead of me putting all of my eggs in one basket, I put it in multiple places. Like you could invest in equity, debt, or you could go for, let's say, funds. You could go with a PMS, you could go with a mutual fund, you could go with another AIF or something. That's for equity, right? But there are many like commodities, gold. This year it has been very famous. It gave like a 38% returns in a year, outperformed stock Nifty. Like Nifty gave, like I don't think it gave any return. But how much return that Nifty gave? Minus 4.6% in the past 378 days. So it actually gave you negative returns. So gold gave really high returns. Bitcoin, how much returns did Bitcoin give me? Let's say in the past 1 year, October to wait, yeah, 300. There are 360 days now. Wait, there are 360 days. Wait. See, I don't have my mouse right here, so it's kind of hard. There you go. Damn. It gave me. Oh, wait a second. I think I did a mistake. I get a mouse. It would be smarter for me to get the mouse out right now. Okay. I wasn't prepared much for this, and the thing is, my proper mouse is gone somewhere. Okay, now it's better. I don't have a mouse, but I am really not prepared for any of this. Okay. Bitcoin gave me a lot of returns, right? Yeah. Till like 1 year October, so like yeah, it went up around 76% from around October, na? November. This is November. Very good. October is very good. It went from 62,000 and touched around 1,26,000. Gold also went up. This is just say, I am just saying that you shouldn't only go for equity, and a lot of like mutual funds and everybody will say that we are diversified, like we buy government bonds and all, but is that really diversified? Let's say I have 1 crore as my investment amount. If I put, let's say, buy equity, buy government bonds, buy gold ETFs, buy, let's say, a private company, is it really diversified? Or buy land, I don't think it's diversified, because for proper diversity, I think you need to go around to different countries, and different countries doesn't mean like just US or Europe. Wait a second, let me get some data. There you go. So if you see, like, okay, US out give the highest returns, okay, yeah, and India is a close second, but during 1995 and 2000, Japan was the best, and like like in the previous decade, 2010 to 20. So basically, I was a kid at that time. Nifty didn't perform well, but in the past 5 years, it did very well. Nasdaq also. Wait a second. In 2000, it made a high of around 4,000, and it needed, like, it took, wait, how much? Around 14 years to break that high. So I need to put like a 50-year thing to be able to see it completely. So it traded in 2000 and broke it in 2014. So around 14 years, US market didn't, do another high. So for 14 years, if a US citizen was only invested in the US economy, he's dead. And even in Indian economy, like for a long time, Nifty didn't perform that well. Nifty, no? So there is no point in just investing in your own country. Why don't you go even abroad? And not just US. I mean, abroad means I mean really abroad. Like, why not Indonesia? Why not Taiwan? I won't suggest, I won't say China or anything because, yeah, see, Corona to okay. In 2015, Nifty went from 8,000, 9,000 to 7,000, so almost the entire year. What did Nasdaq do in 2015? 2015, it went from 4,900. It was almost the same. It also was in a correction. So if you were in the Indian or US market, you basically didn't earn anything because both the economies were in a correction at that time. So let's say you bought land also. Okay, I bought land in India, so I am exposed to the Indian economy. But if so, I should not put my money more in Indian economy in stocks and buy, let's say, stocks in another country or bonds of another country. So I am not that well, like I am sick, so that's why the content may not be the best, but try to get the message. And about Nifty, so that's what I'd like to say. So you shouldn't just only go for sorry for that, but you shouldn't only go for one thing. You should see, concentration would help you beat the market short term, like beer. There is a company that is give like insane returns, but right now it's underperforming. So thing is that there is no one industry that will last forever. ITC, despite being a very stable business, didn't do much for a long time. HUL didn't do anything. I forgot the name, but a hospital company didn't do well for some time. So it's called cycle rotation and all that. So, and sometimes Indian economy will not do well, but gold is doing well, or some other country's economy may be doing well. So the thing is that there is no real time, that you can't really say that, I have that one very big pad that I use. It's all downstairs. I have this thing up here. It was working properly. Like, I have more resources than last time available right here, but last time was like my first video. I was just trying out. So, and even now, let's say Indian economy, you can't say much until it goes about 25,600, which was like its previous high. Well, technically the previous high was like 25,400, but let's consider 25,600. So personally, this is completely personal. I am not allowed to give any suggestion. You know what? If I'm not allowed to give any suggestion, I won't give any suggestions. But if it goes below 25, if it does not, I'd be cautious around right now. Not 25,600, like it would. I'm not going in there. So that's what I'd like to say. You should go for various things. Like, don't be like, oh, I'll just go for XYZ sector. And even if you're going in a mutual fund, make sure that your manager understand several industries, invest in several industries, several economies, hopefully, several assets, not just debt even, or not just equity, but go for like debt of several. Argentina's bonds, government bonds, give around 40-50% returns. I have read. I don't know how much true it is or which one gives it exactly, but I read there somewhere. So risk is there a lot in our country, but risk is there everywhere. So you take the risk, you get the reward. So anyway, bye. Sorry for the bad video. I'm sick, so not much energy. So bye everyone. See you later. Next video, whatever you want, you guys can tell me in the comments. I don't think anybody will be watching this video. I may be just talking to myself. Such a sad life now. You know what? I'll make another video on sad life. You know what? If I and diversification. Okay, I'll get a little real. Yes, I am wearing shorts. I go a little deep. Diversification is not only just for stock market. Na? Like you can diversify everywhere. Is it really right to I am talking in every aspect life? Is it really good to just put everything in one thing, or is I'm better off, let's say, putting in everything, like in job, in education? Okay, this may sound very wrong in certain scenarios. Let's say, okay, you know what, all those people who, unlike, like who are the opposite of me mostly, let's say you like a girl in college or in school or in office or whatever. Would I like do not go with any emotional perspective, go with a completely dead emotions? Would I, if I, let's say, put all my money, my time in just one girl, and let's say if she leaves me, everything got defaulted now. Like I lost everything, all the time, money I invested in that case. But let's say if I put time and everything in, let's say, 5 girls, one leaves, I have 4 more, 2 leave, I have 3 more. So like my chances of losing reduces now. So understand it like that. I invest in 5 economies, 2 economies don't do well, I have 3 economies to support me. So it's called hedging. It will reduce returns, but safety is better than doing that. You know, this relationship thing, I actually is like, I'm very sorry if anybody feels bad, but let's be real. I'm not saying anything emotionally. This is completely disregarding any emotions. Purely data. So anyway, bye.